Good morning. You're watching Market Cafe with me, Shreyanti Singh and Snehisha. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar, and also tell you what the brokerages are showing as well. But let's get started. There's a lot to cover on the show. But,
well, absolutely, Shanti. Lots happening globally also. And, that rally that we were seeing in the US markets looks like it has taken a little bit of a breather, but it's not much to worry about anyway. But the S&P 500 futures are near the flat line on Monday night as the market rally took a breather. Moves follow a losing day on Wall Street that pulled the Dow and S&P 500 off record highs that were seen just last week. The Dow and S&P 500 slip almost 0.2% and 0.4% respectively. Nasdaq inched lower by just 0.1%. Not much to worry about, like I said, but yes, it is a speed breaker in the rally that we were seeing coming across Wall Street. Now, Monday was also notable because it was the first day with e-commerce giant Amazon replacing Walgreens Boot Alliance as one of the 30 members in the blue chip Dow. Now, looking ahead, investors will watch Tuesday for economic data on durable goods, housing and consumer confidence. They'll also watch for earnings reports from retailers Lowe's and Macy's before the bell, followed by Beyond Meat, Virgin Galactic and Rocket Labs after the market closes. Now, those come before January's reading of the closely watched personal consumption expenditure price index as well as data on personal income, which is due later this week. Investors will also watch out for these releases for future clues into the health of the economy and for insights into the path of monetary policy. Now, the three major indices are on tracks for wins with just 3 days left in February's trading month. When you look at it from a monthly point of view, Nasdaq has led the way, jumping more than 5%. S&P 500 has followed with a gain of 4%, and the Dow has lagged, advancing just over 2%, but nothing to worry about because on a monthly basis also, all three of these indices are logging in gains. And with that, let's also shift focus and talk about the European markets this morning. Largely in the red, as I see DAX just flat, holding on to the green by the skin of its teeth, but FTSE down 0.3%, CSE down 0.5%, and Stock 600 also down 0.4%. So while Shanti, I wouldn't say it's a weak handover, but it is not as strong as it used to be last week. So let's see how this pans out for us. But with that, tell us what's happening in the world of crude.
Absolutely, it's very interesting, not just crude, but when you look at the world of commodities, the movements that you're seeing are very interesting because oil prices did fall nearly 3%. And that was, after posting a weekly decline after a US central bank policymaker indicated interest rate cuts could be delayed by at least 2 more months. And that was the move that we saw on Friday. It's very interesting what we've seen in terms of the weekly decline as well, because there is an understanding that the demand picture does look good. So such a move on Friday was definitely very crucial. Now, when you look at the move on Monday, oil prices gained on Monday, and this was as European diesel demand constrained by Russian sanctions and shipping disruptions pulled prices higher in a market that is already jittery with US refinery output limited by plant overhauls. Now, when you look at Brent crude futures, they settled with a gain of 91 cents or around that $82 a barrel mark. WTI as well finished up $1 up or about 1.4% up around that $77 a barrel mark. And a slump in US refinery activity and disruptions as well to global trade have tightened diesel supplies and it's something that we've seen play out. US refinery utilization has been at 80.6% of national capacity for the past 2 weeks, according to data by the EIA. And when you look at oil prices as well, they have been trading between a range of $70 to $90 a barrel since November. Now, this is of course as rising US supply and concern over weak Chinese demand offset OPEC plus supply cuts despite wars raging in Ukraine and Gaza. Of course, we've seen a bulk of those moves come in for oil as well on account of the geopolitical tensions. And when you look at gold prices as well, gold inched lower on Monday, and this is the market focus shifted to US inflation data due this week, which could influence the timeline of Federal Reserve interest rate cuts. So when you look at spot gold, that edged about 0.2% lower around that 2031 mark, above the key 2000 level. And US gold futures also dropped about 0.3%. So that's really the move that you're seeing coming in for commodities.
Well, absolutely. With that, let's also take a look at all the important cues that you need to be keeping on your radar for today's trading session. Not much happening globally, but from the US, we do have an important data point coming in. That's the quarter 4 GDP numbers. It's an important metric, so watch out for that, along with the crude oil inventories as well. Shifting focus back home, you've got 3 companies that will be holding their board meetings today. ICICI Bank will be meeting with its board to mull the delisting of the equity shares of ICICI Securities. So we'll watch out for that counter in trade today. The board of Vodafone Idea is going to meet today to mull fundraising. So, well, we've seen some rally in the stock yesterday and in the days in the past when this news had come out. Let's see how the stock reacts to this news flow today and what's the outcome of that meeting as well. Paisalo Digital, that board will be meeting today to consider issuing convertible debentures, NCDs on a private placement basis. So we'll watch out for that stock as well. Today is also the last day to be eligible to buy NMDC to be eligible for their dividend. So if you want to gain their dividend, today is the last day for you to buy to be able to be a part of that record as well. And South Indian Bank, those shares will be trading ex rights in the ratio 1:4. So be watching out for all of these counters in today's trading session. Let's talk about the primary markets. 2 IPOs opening for subscription today, Platinum Industries as well as Exicom Teleservices. Both of these IPOs will be opening for subscription, and lock-in period also ending for 2 recently listed companies, Fedbank Financial Services and Flair Writing Industries. 3% equity each coming out of lock-in for both of these companies. When we take a look at the other events happening, what's happening in the general news flow and across the country, the Prime Minister will be dedicating 3 ISRO facilities to the nation today. He will also be on a visit to Kerala. And internationally, the International Energy Week in London is kicking off today. So watch out for all of these cues in today's trading session.
Well, moving on from important cues that you should watch out for to important commentary coming in from the ECB's President Christine Lagarde, as she says retreat in inflation in the eurozone will continue, but she needs to see more evidence that price growth is returning to the 2% target. Policymakers are particularly focused on labour costs as a key driver of medium-term inflation, while pressure on negotiated wages eased at the end of 2023. A new forward-looking indicator signals elevated salaries are not yet at an inflection point.
And in other news, well, cautious commentary coming in from Morgan CEO Dimon as he thinks there's a better than ever chance that the US is heading for a recession, though he doesn't see systemic issues looming. He adds that the market is kind of pricing in a soft landing. He also says that higher interest rates along with a recession could hit areas such as commercial real estate and regional banks hard, but with limited macroeconomic impacts.
And shares of Zoom jumped as much as 13% in extended trading on the back of its Q4 results topping street estimates. Although the CFO said that the growth would have been faster in the fourth quarter if not for a sales reorganization. Meanwhile, the company also announced a $1.5 billion share buyback, which follows a $1 billion authorization that started in 2022 and has expired this month.
Well, let's shift focus and talk about the world of cryptocurrencies, because Bitcoin has resumed that rally that we had seen, ripping through that $54,000 for the first time since December 2021. Even when I look at it right now, it's in fact at 54,800, so very close to that 55,000 level again. Bitcoin broke through its major resistance level at $53,000 during the mid-morning US trading hours, which halted price rallies over the last 2 weeks. Now remember, it outperformed the broader market CoinDesk 20 index, which advanced 4%, topping the 2000 level for the first time. Bitcoin on a rally 6% higher as we speak. Ether also 2.5% as we speak.
And it's a mega boost for Indian defense system. Uttar Pradesh CM Yogi Adityanath inaugurated the Adani Ammunition Complex and Missiles Complex in Kanpur, which is touted to be the largest integrated facility in South Asia. This has been dedicated to the warriors of Balakot strike, aiming to produce arms, ammunitions, rockets and artillery shells starting just next month. Another missiles facility was also virtually inaugurated in Hyderabad. The event had UP CM Yogi Adityanath, MD Karan Adani and Chief of Army Staff in attendance. My colleague Ajay Sharma spoke to the Adani Group Director Jeet Adani and CEO of Adani Defence and Aerospace Ashish Rajvanshi about this mega defence project. Take a look.
From the family perspective, I can tell you that the commitment level for this business is extremely high. The defense business is something which often has a hockey stick. So, you might not notice it, but suddenly it can become very, very sizable and meaningful in a very short period of time. So that's something to always watch out for. And I feel that we are at an inflection point where for the past, 6, 7 years, we've been working on a lot of different programs, a lot of different platforms. And I feel now we are at a stage where we have something meaningful across the platform that we can offer.
Right now, this is in the private company, the defense business?
No, it's under Adani Enterprises.
Great. That was a very important clarification. Thanks for that. Ashish, you're a man of numbers. You made a very interesting presentation early on. How are the numbers stacked up in the favor of this business for Adani?
Oh, wonderful. See, we need to understand what's the long-term potential. $300 billion, you're talking about less than 4 Tier 1 players in the market, yeah, Tata, Bharat Forge, Adani, L&T, for example, yeah, and then there's a long tail of 800 MSMEs. So it's very important that we have a whole-of-nation approach where all these players are coming together, and rather than talking about the numbers, are focusing on the purpose of building the nation.
Sure, I understand. But what categories would you be looking at in a phased manner, and what is the potential? There would be some number internally you would have put in mind for 5 year, 10 year. This is the kind of revenue number.
Yeah, see, in terms of which areas we are focusing on, it's very clear based on the 3,000 kilometers of land and naval border. Yeah, ISR becomes the primary important area. And ISR stands for Intelligence, Surveillance, Reconnaissance. That how do I complement the foot soldier by giving him technology and giving him technology in unmanned, where we will discuss unmanned aerial systems, unmanned ground systems, unmanned naval systems. How do we function and work along with DRDO on the early warning systems? And also bring in technology from a perspective of cyber. So these are areas around ISR which are important to us.
Well, all right, that was an 18 Now exclusive. Let's move on then. And PM Modi inaugurated the Bharat Tex 2024, one of India's largest ever global textile events, to put a spotlight on India's rich textile heritage. Addressing the event, the PM promised to support the textile sector in the coming years. He also added that India's textile market valuation has nearly doubled to 12 lakh crore from 7 lakh crore rupees back in 2014. Let's go across and listen in to what he had to say, and also listen into this exclusive conversation with Union टेक्सटाइल मिनिस्टर पीयूष गोयल।
विकसित भारत के 4 प्रमुख स्तंभ हैं गरीब, युवा, किसान और महिलाएं। और भारत का टेक्सटाइल सेक्टर इन चारों यानी गरीब, युवा, किसान और महिलाएं सभी से जुड़ा हुआ है। इसलिए भारत टैक्स ऐसे इस आयोजन का महत्व बहुत बढ़ जाता है। साथियों, विकसित भारत के निर्माण में टेक्सटाइल सेक्टर का योगदान और बढ़ाने के लिए हम बहुत विस्तृत दायरे में काम कर रहे हैं। हम ट्रेडिशन, टेक्नोलॉजी, टैलेंट और ट्रेनिंग पर फोकस कर रहे हैं।
Undoubtedly, what you can see at Bharat Tex shows you the strength, the vibrancy, and the confidence of an industry which is now going to go out there, capture international markets. We just had an engagement with world CEOs of the textile sector. We are raring to go, and we'll be $100 billion by 2030.
And 5-5 vision, that is Prime Minister's vision of 5-5.
Prime Minister has really encouraged the whole industry to work on one platform, bring all the sectors from farm to fiber to factory to fashion and exports foreign, working as a team and breaking the silos which have existed for so many years. And we are very, very encouraged with Prime Minister Modi's guidance this morning. I can assure you that every single stakeholder of this sector is completely looking at a transformed sector, is wanting to be a part of the growth engine that India has become.
Well, time for a quick break, but when we come back, we'll take stock of how the Asian markets are faring. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at what the Asian markets are doing right now. And largely a mixed handover coming in, or mixed start to the day coming in. When you look at Asian markets, when you look at Hang Seng on your screens, not doing all that much, rather subdued. When you look at Shanghai as well, similar moves when you're looking at the whole set of Chinese markets. And Shanghai as well subdued. Major economic data this week, of course, includes China's manufacturing PMI data. And of course, there's US personal consumption expenditures price index, which is the Federal Reserve's preferred inflation metric. So these were the two major data sets to digest. And this is the move coming in for Shanghai as well as Hang Seng. But when you look at Nikkei, that one has managed to hold off its own. And when you look at Nikkei, that is up right now, up 0.2% thereabout. But mind you, it did hit a record high in the previous session. In fact, data also showed that Japan's core consumer prices rose at a slower pace in January compared to a year ago. So that's quite the interesting move coming in. And Japan's two-year yield also rose to its highest levels since 2011. So that was an important move coming in. When you look at KOSPI as well, at the start of the trading session, we did see those that weakness coming in for KOSPI. Also not decidedly lower, but still in the red there on your screens, down about 0.2% thereabout. And when you look at ASX 200 as well, that's also mirroring KOSPI. Similar moves coming in for the ASX 200 as well. So that's largely the handover coming in from the Asian markets as we speak.
Well, absolutely. But on a programming note, then stay tuned to ET Now on Wednesday, 28th February, as we bring you all the highlights from the 10th edition of Aditya Birla Sun Life Mutual Funds Voyage. The theme this year is investing opportunities in a dominant Bharat. Like every edition of Voyage, this year too promises to offer a stellar lineup of industry stalwarts who will share a micro and macroeconomic view of how the mutual fund landscape is expected to transform. Stay tuned to ET Now for more.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at what's happening with Paytm then. And Vijay Shekhar Sharma has quit as Paytm Payment Bank's chairman and board member. The company is reconstituting its board amid RBI clampdown. Remember, the central bank has barred PPBL from accepting deposits and credits from any customer post March 15th. Ankur Mishra is standing by with more details. Ankur?
Yes, now the Paytm Payments Bank the board has been reconstituted and Vijay Shekhar Sharma is out of it. Now, one of the problems which has been of Reserve Bank of India, if you remember that, an arm's length has not been maintained between Paytm and Paytm Payments Bank. And now the company is trying to answer those concerns, to sort out those problems, and hence now the board is reconstituted. We also learned that there has been appointment of Srinivas Sridhar, Devendranath Sarangi, Ashok Kumar Garg, and Rajni Shekhar Sibal. All these independent directors have been joined in Paytm Payments Bank, and now the bank will also look for a new chairman after Vijay Shekhar Sharma has stepped down. Now, all this development needs to be seen by an effort by the company to improve and to respond the concerns which has been raised by Reserve Bank of India in the recent past. Remember, there is an embargo which has been put by the regulator on Paytm Payments Bank on various functions of be it FASTag, be it customer additions. All these cannot be done by Paytm Payments Bank, and to improve the future and to have the business continuity, this step has been taken by the company.
All right, Ankur, thanks so much for taking us through the latest with whatever's happening at Paytm. But we also caught up with market expert Ashwin Parekh, and he told us what one can expect from the fintech firm and how it may help the company recalibrate from its constant up and down recently. Here's an excerpt of what he said.
I suppose, it must have come from the shareholders. I mean, that's what I believe. And it's one of those moves where, there's a clear sort of, indication to the regulator that we are open to any kind of sort of, scrutiny, any kind of examination that you want to carry out. I mean, and that this was essential, I suppose. I mean, not only to give comfort to the other stakeholders, but more importantly, the customers as well. Suggesting that if at all, there was anything, any decision made in the past, then they are open to really answer, and they are open to really get the whole thing investigated.
Moving on then, Finance Minister Nirmala Sitharaman yesterday met with regulators and managements of fintech companies in Delhi, and sources tell your channel that the Paytm issue was not discussed at all in the meeting. Sumit Chaturvedi is here with more details from what happened in the meeting. Sumit?
There was a high-profile meeting between FM Sitharaman and around 40 heads of fintech companies and startups, and regulators and banks were present in the meeting as well. Important points were discussed. The issues from the fintech firms were discussed. One important point was that FM directed RBI to have a one day dedicated to address the concerns of fintech companies every month. Also, Paytm issue was not discussed at all. That's an important point. Other issues which were discussed included cybersecurity, also GST linked issues, also foreign equity and dual listing. They were all discussed as well. In the backdrop of certain companies having issues over the last few weeks, as far as the regulators' actions were concerned, this meeting was held. But overall, the issue of Paytm payment bank did not come at all, as has been informed to us by the sources. So overall, the meeting was in a cordial atmosphere where Paytm issue was not discussed, but fintech firms, they had a chance to get their issues addressed by FM herself, who was present in the meeting.
Well, thanks Sumit for taking us through that. Let's shift gears and talk about SEBI, because SEBI has issued advisory against fraudulent trading schemes targeting Indian residents, falsely claiming affiliation with SEBI-registered foreign portfolio investors. Fraudsters lure victims through online trading courses, seminars and mentorship programs. Let's go across to Anurag Shah for more details on this. Anurag, good morning. Take it away.
Recently, market regulator SEBI has received a lot of complaints regarding fake FPI-based trading apps, and in this regard only, SEBI has issued an advisory to investors to remain cautious about these fake trading apps, because as per SEBI, Indian residents are not allowed to make investments in FPIs. So these apps are making false claims and enacting victims through online seminars, through fake telegram channels and mentorship programs. So investors need to remain cautious, because the claim of providing institutional access is completely fraudulent, and investors need to remain cautious about the claims made by these trading apps that these apps are affiliated to SEBI, because as per SEBI, Indian residents are not allowed to make investment in FPI. So institutional access cannot be granted to Indian residents.
To an 18-hour exclusive then, Indian Banks Association is mulling a panel to protect bank executives against corruption charges. The idea came post the order of the Mumbai High Court declaring arrest of Chanda Kochar in the Videocon loan case illegal. Astha Chopra is standing by with more details. Astha?
Well, the banks are considering to create a panel to protect its executive against the corruption cases. The panel will protect the bank executives on the decision taken in good faith. This panel decision was created by the Indian Bank Association after there was an illegal arrest of Chanda Kochar and the other executives of bank as well. The idea of the panel is at an early stage. It's not been decided yet, but there are discussions going on within the banks and the parties of IBA as well. The panel will make a framework and deal with the cases which are under the Prevention of Corruption Act cases. Also, it will take care of all the executives and top chains who are in the corruption cases as well. IBA may take legal advice on the idea of such a panel from the legal experts. Many legal experts will be there, but all the decision who will head the panel or who will all be the member of the panel will all be taken into consideration after the panel will be made. Also, the panel may have representatives from the major banks in India. So this is a whole decision where IBI is in the talks for discussion and creating a panel to safeguard their executives from the corruption cases.
Well, all right, Astha, thanks for that. Well, let's get you an interesting study now. What are Indians spending on and how much are they spending? The per capita monthly household expenditure has more than doubled in 22-23 when you compare it with 2011-12. In fact, this household consumption expenditure survey also reveals that Indians are now spending lesser on food items and spending more on discretionary such as clothes and gadgets. Let's go across to Aishwarya to get a detailed report of this survey. Aishwarya, take it away.
Ministry of Statistics comes out with annual numbers in terms of household consumption expenditure survey. Now, this survey indicates how we are spending our money, what we are consuming, and if we are leveling up our standard of living. In terms of this survey, it indicates from 2011-12 to 22-23, our household spending has more than doubled over a decade. As far as the per capita consumption in urban areas is concerned, that has gone up from 2,600 rupees in 11-12 to 6,500 rupees in 22-23. As far as the rural areas is concerned, that has also risen from 1,400 rupees in 2011 and 2012 to 3,700 to over 3,700 rupees in 22 and 23. The survey also indicates that there is a little bit more of tilt towards non-food consumption, which is discretionary consumption. And so take a look at the next chart, which shows you the share of non-food spends. As far as the urban areas are concerned, that has risen to over 60% in 22-23, and back in 2011-12 it was a tad bit low, which was just 2% away in terms of non-food spends. In the rural areas, that has also seen an upsurge to 53% from 47% back in 2011 and 12. The share of food spends in urban areas, that has seen in fact a decline from 53% to 46% in 2022-23, and in the rural areas from 42% to over 39% in 2022-23. So these two indicators definitely give us a picture of the spends that consumers are gravitating to more towards entertainment, buying television sets, even apparels for that matter, but less on the food side.
All right, time for a quick break then, and when we come back, we'll take a look at some stock-specific news.
Hi there, welcome back. You're still watching Market Cafe with us on ET Now. Now let's take a look at this brokerage note that we are getting bright and early this morning, and that's coming from UBS, and it's on TCS, and it's a rather bullish note coming in this morning. UBS has gone ahead and upgraded TCS to a buy rating and has also hiked the FY25 EPS as well, and they've upgraded to a buy target at 4,700 rupees per share versus 4,050 that they had earlier. They've lifted the FY25-26 earnings per share estimate by 3% and 9% respectively. They're saying there's enough drivers in the company for industry-leading growth and margins, and ramp up of large deals such as BSNL, NEST and Aviva will also help the company going ahead. Large deals to support growth revival in the BFSI segment as well. That's what they're penciling in when it comes to TCS. And well, they're saying that the level for growth will be based on the revival in the cloud migration projects as well. And a gross margin can expand by more than 100 bips in the next 4 to 6 quarters. So that's a rather positive commentary that's coming in this morning. They also expect a sharp fall in attrition to aid gross margins going ahead as well. They're also seeing a potential of roughly 200 bips additional improvement in utilization, and they're valuing the company at 28 times a price to earnings on an FY26 earnings per share. So that's the valuation that's coming in. And lastly, they're also saying that the current multiple premium that TCS has versus its peers is below historical average. So that's another positive coming in for TCS. So well, all in all, a rather bullish note coming in from UBS on TCS. Let's see on the back of this note how the stock performs in today's trading session.
Absolutely, it'll be key to see how that performs. But Jefferies has downgraded electronics manufacturer Dixon Tech and Whirlpool to underperform. However, the brokerage house has shared stocks that they're bullish on and the rationale behind it as well. My colleague Vinny has more details. Vinny, which are the stocks on their radar?
So let's keep an eye out on some of these stocks coming in the consumer durable side, especially starting with Dixon, because Jefferies has downgraded the stock to an underperform, cut the target price to 5,920 rupees per share from the previous target price of 6,440 rupees per share. Do not forget, Dixon Tech has already seen a very sharp run up in the last 1 year, more than tripled as well in terms of an up move. Even in terms of the P, that is also at a quite high level, currently trading at around 73 times FY25 P and 52 times times FY26 PE. So the risk reward, what Jefferies is highlighting, seems to be quite stretched for Dixon Tech, especially in terms of order book sustainability is something that will be a focus area. 80% of OEM sales mix with low margins. That's a concern that comes in on that front as well. Capex outlay, how is that going to shape up? Competition, there's a lot of emerging competition as well. So, and do not forget, there's a bit of a softer demand that is warranting in terms of a cautiousness that one should maintain for Dixon Tech. That's the word coming in from Jefferies. They've cut the FY25, FY26 EPS by 2 to 3%, and overall they believe that Dixon's valuations will now start normalizing, because even when you compare to the global peers, Dixon's valuations are quite high compared to the global peers as well. So yes, once the growth phase is actually behind them, we'll see the valuations coming down, and that is why they're cautious on this one and cut it to downgraded to an underperform rating. Similarly for Whirlpool also, they're saying that Whirlpool's performance had actually missed their target, what they had given previously in the last few quarters as well. So yes, because of it missing the targets that Jefferies has set for it, or in terms of estimates that Jefferies has set for it, plus there's increasing competition. It's a hypermarket competition in India, especially coming in for Whirlpool. Given that there's a strong organized competition increasing, minimal informal market that is there for Whirlpool as well. So they've cut Whirlpool's EPS target as well, and overall they believe that maybe the operating performance is something that could see a decline. So that is why they've cut Whirlpool to an underperform rating, target price of 1,125 from previous target price of 1,265. So the shares that they like actually is something like a Supreme Industries, Amber Enterprises, Kajaria Ceramics is something they're positive on, but a downgrade coming in for Whirlpool as well as Dixon Tech from Jefferies.
All right, Vinny, thanks for taking us through that. We'll see how the entire electrics space works on the back of this brokerage note coming in. But with that, let me take it across to my colleague Ansh, who's standing by with a snapshot of what the derivative setup is looking like today. Ansh, good morning. Take it away.
Good morning, Sneha. So starting with Nifty first, as you can see in the chart as well. So in the previous week, Nifty was hovering around that 22,120 level for most of its time. And in the previous session, Nifty gave a pullback to around the same level, indicating continuation of consolidation pattern around this level. Now, if you talk about futures and options, then in index futures, we are seeing open interest declining by around 10%, indicating long unwinding trend, which says a bit of a cautious signal, if not strongly bearish. Whereas on option front, we are seeing call writing happening at 22,200 mark, indicating strong resistance around this level, whereas on downside we are seeing some mild put buying happening at 22,100, indicating traders are actually expecting index to fall below this level. Whereas moving on to Nifty Bank, if you'll see the chart of the Nifty Bank, index has slipped below that 50 DMA, but not decisively. It seems to be just hanging around that 50 DMA, which gives some hopes for the index to get back above that level. Now, if we talk about futures, then here we are seeing open interest declining by around 12%, indicating long unwinding, similar trend to that of Nifty, a bit of cautious. Moving on to FIIs, so in index futures, they added around 5,100 long, they covered 2,700 shorts. So net to net, we are seeing an addition of around 7,900 contracts, due to which the total FII long position has gone up to 45.1%, indicating the continuation of bullish stance into the market. Also, lastly, we have 3 sessions left for Feb series expiry. So we may see some volatility coming into the market.
So some volatility is being penciled in, but that's how the futures and options roundup is shaping up. But which are the stocks that you should look out for? Ansh, I believe you have the answer to this as well.
Right, so right now we don't have the stocks currently on the front. There's some technical issue, I think.
Problem. Let's get a move on then, and let me take you through the stocks that could be big buzzers in today's trading session. And the first one would be Tanla Platforms then, because they've announced the launch of their new product, TrueBlock AI. So that stock is going to be in focus today to help enterprises, telcos, regulators and users in multiple ways. Well, this is what they aim to do with that product. So Tanla Platforms is going to be in focus today. Moving on then, let's talk about Lemon Tree Hotels. The company has signed a license agreement for Lemon Tree Resort in Rajasthan and Keys Light by Lemon Tree Hotels in Vijayawada. Now, both these properties are expected to open in FY27. 26. A positive trigger coming in for the stock. Let's see how that pans out, hopefully in the green today. And let's take a look at CESC because they've come out with their investor presentation. They say that they're exploring investments in renewables energy generation space in advanced stages of acquisition for 2,000 acres and 250 acres under physical possession. Now, Power Mech also will be in focus because that has received an order worth 396.2 crore rupees, and this is for the construction of the electrified 4th railway BG line in the state of Chhattisgarh. Segachi Industries, another stock in focus because two WOS of companies, so that's a wholly owned subsidiary of the company, two of these have announced the formation of a joint venture, Segachi Global, to enter the growing UAE food and pharma market. So, well, there's a roundup of all the stocks that could be in focus in today's trading session.
And on a programming note then, global experts, Indian policymakers, economists and industry stalwarts will all be in attendance at the 10th edition of Aditya Birla Sun Life Mutual Fund Voyage. Collectively, they'll dissect investing opportunities in a dominant Bharat. You don't want to miss it. Stay tuned to ET Now on Wednesday, February 28th, as we bring you all the coverage live from Voyage.
Well, all right, and now let's shift focus to the primary markets because we did tell you today that 2 IPOs are opening. 2 of them are main board, and we also have 1 SME IPO that's opening, and all of these are set to hit these streets soon. So Ashesha Advaryu is joining us with all the details. Ashesha, good morning. Take it away.
Well, yes, a lot of primary market action. 3 IPOs to open for subscription today, 2 on main board and 1 SME. First up, let's talk about the main board IPOs, and in that we have Platinum Industries. Now, the company specializes in producing stabilizers. The company manufactures PVC stabilizers, CPVC additives and lubricants, which are used in PVC pipes, PVC profiles and other categories. The company says that the proceeds of the IPO will be used for capex of its overseas subsidiaries, for its own capex, for working capital expenditure and for other general corporate reasons. Apart from this, let's also talk about financials. Company generated revenues of about 124 crores in the 6-month period ended 30th September with profit after tax of about 23 odd crores, and it has reported solid growth over the last 3-year period. Secondly, let's also talk about Exicom Tele-Systems. Now, it specializes in power systems, electric vehicle charging and other related solutions. As on the 30th of September, it supplied its EV chargers to over 70 customers, including 15 automotive OEMs, 32 national and about 4 fleet aggregators as well. As far as proceeds of this IPO and its utilization is concerned, the company said that it will be used for capex, for debt repayment, for working capital, for R&D investment and for other general corporate purpose. It generated about 467 odd crores of revenue in the 6-month period ended 30th of September with a PAT of about 28 odd crores. Lastly, let's talk about the SME IPO, which is Purv Flexi Cap, which will open today, that is 27th of February, will close on the 29th. And the IPO size stands at about 40 odd crores. So keep an eye out on all these 3 IPOs, which will open for subscription today.
Thanks, Ashesha, for those details. But with that, we're timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put the show together. Thank you so much for watching. The market takes all of the action forward.